Jenny said if you would do your job properly, Jörg, then you would be redundant in a couple of years, when?
First of all, I absolutely agree to almost everything Jenny said. I don't think that sustainability officers will be redundant because everything she described, what you said, Jenny, was absolutely right. It's hugely complex. You need to bring people together. You need to have a hell of a resilience. And it's a lot about project management. You need to integrate it into the company, and that means you need to know who can make a decision possible, who can drive a process, who do I have from finance, who do I have from risk, who do I need to bring to the table from business, and how do we make that decision possible? And it's not the lowest denominator, it's usually to find the common ground where a decision is possible. And all of that is hugely complex, and our world, Matthias will talk about that too, I'm sure, is not getting easier, it's getting more complex every day. I want to say a big praise to the ISSB, not only that they are in Frankfurt, but what they are doing is extremely helpful for us because they are setting a standard, they are giving us a language, and they're giving us something we can report and we can manage towards. And that is very important. If they get their job wrong, we have trouble because we will manage towards the wrong things. And I think all of that together is the chief sustainability officers won't be redundant for many, many years because it's an illusion that you can just integrate it in the company and then it's all running. It's a lot about cross-divisional, cross-regional management, project management. That will be necessary for the next 10, 20 years. And what you don't see, and you should always be skeptical if you see huge sustainability offices, that should not happen. You should have the expertise in your businesses, but then you need to bring the people together, and that won't make us redundant for a long time.
Yeah. The market was flashed last year in October because you brought up the transformation, the climate transition plan and strategy for Deutsche Bank. And one of the sentences was, client portfolios, 80% of your GHG emissions in client portfolios come out of 1% of your customer portfolios. Tell us more about the strategy, tell us more about what that brings to Deutsche Bank.
I think this whole transition plan was extremely important exercise for us internally to bring it all to the table and to get the clarity, what do we have and what are the insights and how can we manage toward net zero. You won't find any marketing language in there. You won't find, it's really very factual. Scope 1, Scope 2, Scope 3, 1 to 14, and Scope 3, 15. And what counts for us is Scope 3, 15 really. It's our financed emissions, either facilitated or our loan portfolio. And if you really look at it, and that was the one thing 2 years ago, where we really looked at our client base and we suddenly saw, yeah, it's the Scope 3 emissions, 80%, or it depends how you count it, but the bulk of the emissions come from a couple hundred clients. And that means you need to focus on these clients. We need to focus on these clients and help them transition. If you ask these clients for transition plans, you better have one yourself. That's, by the way, one of the reasons why we did this exercise. And then you need to think about how you get engaged with the clients and how do we take decisions. We have a net zero pathway now. We need to manage our loan portfolio with regards to carbon down. And that means if our clients don't decarbonize, we cannot decarbonize. So we may need to make very deliberate decisions. For us, it's really working with the clients, and we have a net zero forum. This is one of the things in the plan that is, I think, quite unique, that we describe the work of the Net Zero Forum, how many transactions went in there, how we review deals, what the thresholds are, and then you really go one deal after the other. You can really look at it and how you talk to the client, and that is really crucial. And this interaction helps us to manage it down. And we focus there, but then there are a lot of other things like supply chain, like our mortgage loan portfolio. All of these things are very important.
Couldn't be a better word, supply chain. Matthias, thanks for taking the time to be here. Bayer is completely different driven as a bank. And you are lucky because you are not only the Chief Sustainable Officer, but having also public affairs and a lot more spots in there. When do you think a CSO is going to be redundant?
I agree, it's not going to be the case that CSOs will be redundant in the near future, but they will certainly fail if sustainability is not integral to the business strategy. And that's, I think, how we need to look at it. There has been a lot of CSPR, there has been a lot of greenwashing, whatever you hear, including what we are saying today, sniff it, is there any greenwashing detergent you smell? That's what you need to watch out for. Most important question is, are we able to shape the transition that is ahead of us? The EU Commission just recently agreed on a climate transition plan that is even more aggressive for some industries than it was yesterday. So from that vantage point, the key question is sustainability integral to the strategy or an afterthought, or even worse, is a business working completely to the other direction and kind of harming the key goals in the sustainability space?
Now, as you are a journalist, you are a politician in the past, we must get more political driven.
Happens to the best of us.
How do we incentivize to get the right transition path and speed up?
In Upton Sinclair's book, The Jungle, there is a very important quote. It's a book about the meat industry at the turn of the last century in Chicago. And Upton Sinclair basically quotes that you can't make a man, back then they talked about men, to do one thing if he is paid for doing the opposite. Which is why I find it crucially important that in the way leadership is incentivized, management is incentivized, all employees are incentivized, sustainability is covered. So in the case of Bayer, 20% of all our pay kind of salary depends on making measurable progress against decarbonization, but also impact on the social side. And when we started that, there were only a few DAX companies. Now all the DAX companies have this element in their remuneration plans.
But Wiebke, I think you said a couple of things at the beginning which are extremely important. We need to internalize it into our pricing system. If we don't do that, and I'm an absolute advocate of market economy, but there's a price. And if we don't work with a price, it won't work at all.
Yep.
And it's not a philanthropy exercise. I really welcome all the philanthropic engagement we see out there, but it needs to be incremental with regards to prices. So the carbon price needs to be higher. The price for environmental destruction, if you use our environment and our resources, there needs to be a higher price to it. This is very difficult for politicians, and you know that much better than I, Matthias, to put this in place. But if the EU now says 2040, we need to be at 90% down with carbon emissions, we need to be at a level of 10%, I think, first of all, great. Second question is, how do we want to do it? And third is, let's do it, but not surgery successful, but patient dead. Because if our industry needs to be a showcase, we need to do this successfully. Bayer needs to be a showcase to the world in a successful path. Our European companies need to be successful in that. And for that, we need the right price incentives. Without that, it won't work. And we have too many risks out there, by the way, which are not priceable right now. And there we need support in order, for example, you've just been in Niger, and I envy you for that. But these countries need support, and we need to get the risk premium down there.
And now dig deeper. How do you internalize carbon in your supply chain?
So we started when we made our promise to be carbon neutral and to halve our emissions within 10 years. With an internal carbon price for our own investments. So we basically said, let's not wait for politicians, let's just establish an internal carbon price within our own operations. 100 euros per ton back then, that seemed to be like a huge price. When you look at it now, it's still a high price, but from a global perspective...
Still too low.
From a global perspective, many move in the right direction. Too high or too low? What it did is, it prioritized investments that before that were not prioritized in low carbon or no carbon production. And then we realized we spend 20 billion every year for our suppliers, so it's quite a large sum of money that procurement basically hands over year. Again, we now have the requirement that our suppliers are transparent about their emissions, and we price them with 100 euro per ton. And suddenly our procurement departments can make decisions that are not belief-based, but that you can display in an Excel file, which is what you need to do.
And this is what the audience loves, because you are the digitalization and automation guys. So this is what you stand for, and this is what you supply there.
Yeah, in many ways, I think one of the key challenges we have is that the energy we need to put into getting that transparency about carbon emissions in the supply chain, for example, we talk about that later today, is still too high. So if you simplify things for us, then the invisible hand of the market is beginning to turn green. And that's where we need to get to.
Short question, short answer. Is the Europe Green Deal too much stick or too much carrot?
First of all, I want to praise him for the internal carbon price.
Absolutely.
Because I think it's really important, but it shows also one big problem. Each company is struggling with the carbon price. And to put it, is it right, is it too low, is it too high, and I just don't want to, it's a great step forward. The Green Deal is too complex. It's not easy enough. And when I compare it to the United States, where it's just you get tax relief, when you invest and if you make a profit out of it, you will get the benefit. And this is the way it should work. It's very fast and much easier. And that makes me, again, we tend to make in Europe, we tend to make it complex. In Germany, we tend to make it complex. And this is, a lot of the things should be easy. The perfect is the enemy of the good in the sustainability space, because we don't have the time. We need to move forward quickly, and we need to trial and error, but there in a very simple way.
Super.
Well, we are the #1 seller of carrot seeds, so we obviously want to see much more carrots than sticks. Brussels is the Silicon Valley of regulation, so I think the EU Green New Deal is overdoing it on regulation. We heard in the conversation earlier about crypto that regulation plays an important role. We just talked about a carbon price where regulation plays an important role. But I think the EU Green Deal needs to better balance capital, innovation, regulation, and participation. If we don't do that well, we don't get decarbonization, but deindustrialization. And that can't be a viable solution for the European Union. So I hope that in the next Commission we see a better balance that brings industrial policy and the Green Deal together. And I see first signs that that is happening. One thing is sure, though, as you said earlier, these sustainability topics survived the pandemic, survived wars, will survive a Davos conversation about AI, and most certainly many other things, because it's such a fundamental problem we deal with that the idea that the Green Deal or that approach goes away is not really in the cards. So from that vantage point, combining the Green Deal with industrial policy should be the agenda of the next 4 years.
One more point, which I think, and Matthias said it already, it needs so much collaboration between industrial companies and banks, between development banks, governments, with NGOs. It needs so much collaboration. And that is a complete new approach. You could see that already at the COP in Dubai last year, how those frontiers are fading away. And this is so important. We need to collaborate. That's the only way how we can move forward together.
What does it mean to become net zero? Jörg, Matthias, thanks a mil for all those insights. And see you next time.
Well, it's a simple PowerPoint presentation just to say, what does net zero mean? It means you have to cut your emissions in half every 10 years, and all the remaining emissions you need to offset. That's what it means to basically get to net zero. And when you look at what companies are really doing, measured against this very simple plan, you realize there is a really, really large gap for almost every company. And when you build a business in the fintech space, there's a lot of electricity involved. Make sure you have green electrons reliably, because otherwise your business will be challenged exactly in that space.
Super. Thanks again. Thank you. See you later.
Thank you.